Ladies and gentlemen, welcome back to the channel. Tesla stock is down almost 2% today, and it's a pretty rough day across the board for the entire market. In this video, I will be going over exactly what is happening, and really today is a multi-pronged situation. There's a lot of bad news from many different areas of our markets. In fact, you are seeing a rush to safety as well, with bond yields falling, investors buying bonds, also buying gold. Oil is up about 1%, really sparking a lot of inflationary and or really war fears. But that's just the start. So we're going to get into everything you need to know here in this video, specifically in regards to Tesla and Tesla stock breaking news today, because yes, just like every other day, there is Tesla news that you need to know. We'll go over the option activity. The short position in Tesla continues to go up basically every single day. You also had some Fed speakers that I want to highlight what they said because they also had a negative impact on our markets. But first, before we go ahead and get into all of this information, hit that like button, subscribe to the channel. It's free 99, costs you absolutely nothing to do so. And last but not least, let me know what you think about this information down below in the comment section. First, let's start with one of the bigger pieces of Tesla stock news today, and you have Citibank. Citibank reported earnings. They are down currently about 3%. JP Morgan is also down. Most of your banks and really, other companies that reported earnings today, they're also down as well. And we'll talk about that here in just a moment. I warned about downside that could come in our markets in the video last night, because the writing was on the wall for maybe some downside today. And it looks like that is happening. And the banks, well, could be partly to blame for this downside. But Citi, they slashed their price target on Tesla stock from $196 per share down to $180 per share. They say, quote, "We're updating our Tesla model to reflect the Q1 delivery miss and early April data," wrote Citi. The brokerage firm also provided its thoughts on the potential robotaxi unveiling, stating that they can see two scenarios. The first is an event that feels similar to the 2019 Autonomy Day, in which Tesla reveals a purpose-built robotaxi, but without a convincing deployment path, leaving open questions about how Tesla will compete with the likes of Waymo, Cruise, Motional, and dense urban domains. In such a scenario, were to follow a formal push-out of the Model 2 next-gen EV, then Citi believes this will likely prove disappointing to investors. The second scenario is an event introducing a robotaxi along with a more convincing deployment path. This convincing can come from deep diving FSD/AI performance gains, but also from approaching deployment somewhat differently, Citi explained. They believe that if the August 8th event delivers a credible and perhaps differentiated deployment strategy, that could emerge as a positive for the stock. They say, quote, "Finally, while debatable, we do think the read-through from Tesla's added emphasis on robotaxi/AV is generally positive for the broader AV space. Mobileye, GM/Cruise," added the bank. Citi advises watching for robotaxi unit economics, launch timings, volume, and targets, AV performance, the deployment strategy, and incremental research and development needs. Overall, when assessing Tesla, Citi feels that given the near-term demand headwinds, there's more downside than upside ahead. The firm also trimmed its long-term estimates. I love that. Okay. I think it's pretty clear. August 8th is going to be a very bullish day for Tesla. I don't think we're having this event and we're going to walk away from it with a lot of questions. I think Tesla's going to provide us some guidance, a definitive path, to get robotaxis out there on the road. And I do believe it's coming still the same timeline we expected for the Model 2, the second half of 2025. And I believe that will be really good news for Tesla. I think that will really triumph over any of the bad news that we have seen thus far because of how large the robotaxi potential is. And I also think Tesla is going to take the approach of focusing more on profitability, as I have said before, and I think that is also a huge positive for Tesla stock investors that I think a lot of people are caught off sides for. Just taking a look at the current short position in Tesla stock, it's hitting multi-year highs with short interest now at 3.9%. Even over the past couple of days, it's like every day the short interest is going higher by like 1 point. 1 point. And that adds up. That's millions of shares you're talking about that are what looks like being shorted over the past couple of days every single day. You do have almost $19 billion currently in short positions with about 108 million shares that are currently outstanding today. What's interesting is today Tesla stock is down about 1.5%. At the time of recording this video, Tesla's cost to borrow fees are only about 1%, which suggests that there's not a whole lot of shorting activity taking place today. We can see 1.81 million shares that look like they were covered on today, and borrowed shares at about 900,000. So a net potential covering from shorts of about 930,000 shares. This data is not finalized for the day today. Anything can change, and I expect it will. But as of right now, it actually looks like shorts are kind of getting out of short positions today, at least on a small degree, right? There's still 108 million shares outstanding. If shorts did cover a million shares, really that doesn't move the needle too much. What I find very fascinating is if you take a look at the interesting flow sentiment, these are options trades from hedge funds and institutions, big money, big trades. And today is remarkable. So you have seen 321 trades from big money in Tesla options today, totaling $691 million with a positive order value of 94%. 94% positive today in Tesla options. That's ridiculous. That almost sounds like someone knows something and there's positive news or something coming. That's a very abnormally strong number for Tesla. Like, even on a really good day, you typically don't see 94% positive order value on almost $700 million worth of trades. Here you can see today the NASDAQ, represented here with the triple Qs, is down about 1.6%. And there is a couple different reasons for this. Now, I will also point out the Russell is down 1.62%, the S&P is down 1.4%, the Dow is down 1.2%, but take a look at the VIX. That's a crazy move in the VIX, up over 24% here on the day today. If you don't know what the VIX is or why the VIX goes up or down, the VIX is widely seen as like the fear gauge on Wall Street. Some people say it's not the greatest fear gauge anymore, but it essentially monitors or tracks the put to call ratio on the S&P 500 in any given day basis. So today, with the VIX being up 24%, that means there's a lot more puts being bought than calls, and vice versa. When the VIX falls a lot, that means there's more calls being bought than puts. So there is a lot of put protection individuals are buying heading into this weekend. And really, there's a bunch of different reasons for that. I would say, though, number one is probably because the headlines we are getting out of the Middle East. Believe that or not, that is probably having the biggest effect here on our markets today. We're getting this news from apparently US intel that Iran could strike Israeli soil in the next 24 to 48 hours. I think the markets kind of started to get over this situation. This whole Middle East baby mama drama is what I've been calling it. Because it was seen that Iran would not be striking Israel itself. It looks like Iran is going to strike Israel itself. And that is much more escalatory than the markets were initially kind of expecting. Now, some of the headlines coming out here, also not great. Iran warns the U.S. to stay out of the fight with Israel or face attack on troops. Yeah, that's not great. And there is a direct implication to our financial markets based on this Middle East conflict. And I think that's what a lot of people forget is most of the time, war is not necessarily a terrible thing for the markets. The markets can get over a lot of things pretty easily, but it will have a direct implication on the oil markets. As you can see, oil has been doing well for the past, really couple of weeks now. 2024 in general has been pretty good for oil. But even today, it's up another 1.2%. Brent is up 1.04%. RBOB gas is up 1.68%. And this one over here, ULSDHO, is up 1.35%. So that's upward pressure on inflation. Oil touches basically everything, and that's problematic today. And I think it's really one of those situations where it's a Friday, you're heading into the weekend, people are like, we should hedge out our portfolio, we should sell whatever stocks that we absolutely don't want to own, because if crap does hit the fan over this weekend, we want to be, as best prepared as possible for coming Monday morning. This headline just came out as well not too long ago, about an hour ago. It says, an American official told Al Jazeera, that is like the Arabic news website, they cover a lot of things Middle East. It says, we are moving additional military capabilities to the region to enhance regional deterrence and measures to protect our forces. That is following the threat from Iran to basically stay out of their conflict. 53 minutes ago, there was an alert in Israel about a hostile aircraft that infiltrated northern Israel near the Lebanese border. There is no word on any attack or what's going on. It's rumored that these aircrafts were intercepted and that they were drones, but we don't know exactly. And these headlines just keep randomly coming out and knocking the markets down again. Kind of over and over again today. Even the Fed is commenting on this situation. Fed Goolsbee says the Middle East instability is a wild card for the Fed in terms of oil prices and gas. A negative supply shock is not good. We've went over this many times here on the channel, but you do have the Strait of Hormuz, which I've showed it so many times here on the channel, I don't necessarily want to go over it again. But the Strait of Hormuz has like 30 to 40% of the world's oil supply flowing through it every single day. It's basically controlled by Iran. It's right in Iran's relative area. And if there's a conflict over there in that region, as you've seen with the whole, was it Red Sea situation? Yeah. That becomes problematic if ships start to get attacked or the flow of ships is interrupted, which does happen with these kind of conflicts. And that's bad news for the Fed, as the Fed is explaining. And I think the markets are starting to realize, like, hey, this could be a situation that's really not good for inflation and probably not prompt the Fed to cut rates any quicker. Goolsbee also says if PCE is reinflating, the Fed will stabilize prices, so reaffirming they will stay the course until inflation stabilizes and continues to fall. And then the last headline on this whole Middle East situation. This is one of the first headlines that came out that really started to send the markets lower. Israel is bracing for a worst-case scenario that U.S. officials believe could materialize within just hours. The possibility of a direct attack on Israeli soil by Iran in retaliation for a strike almost 2 weeks ago that killed 7 Iranian military officials. That was according to CBS, and that's kind of what got the markets going on this whole Middle East conflict here today. But in fact, the thing that's probably the most concerning to me, being a guy that likes to pay attention to the flow of money, I firmly believe we don't have the greatest information. If you are Elon, Biden, or other influential individuals, you have better information, you have information quicker than we do, and those individuals are the guys that move their money around first. So I like to pay attention to your quote-unquote risk assets, also your risk-off assets. And in different markets, I like to pay attention to where the money is going. I think the money going different places, it tells you something, and it tells you a story. So today, even though you're getting these comments from the Fed that don't sound great, which I wouldn't expect them to necessarily move yields up or down, what you're actually seeing is yields are plummeting today, about 8 basis points at the time of recording this video. There's no real justifiable or logical reason why that should be happening. So TLT is going up almost 1%. That means big money. They're going out and they're buying US bonds today. That is seen as a rush to safety or a flight to safety. And that's never a good thing when the markets are, this down. And you are seeing a rush to safety. You also have gold making some very volatile, strange moves here today. Gold gapped up in pre-market today, continued to rocket higher into the first 2 or 3 hours of trading or so, and then just completely U-turned and sold off. Now, gold is one of those weird assets where it can be a rush to safety at times, but when crap actually does hit the fan, gold sells off anyways. And that's, you kind of seen the best of both worlds today with gold. Overall volatility in the gold market is usually not a good sign. You also had some bad chip news today. AMD and Intel, they dipped on a report that China told telecoms to remove foreign chips. And specifically, as I warned about last night, you started off earnings season really today, this morning, with big banks. You had JP Morgan, you had Citi, you had BlackRock, you had Wells Fargo, Progressive, and State Street. And the consensus here is it wasn't that good. Okay, the guidance at least wasn't good. And we talked about that in the last video. It's all about guidance. This main headline here on CNBC says JP Morgan Chase shares drop after bank gives disappointing guidance on 2024 interest income. The bank said first quarter profit rose 6% to $13.42 billion or $4.44 per share from a year earlier. But guidance for 2024, the bank said it expected net interest income of around $90 billion, which is essentially unchanged from previous wordings. Investors were looking for $2 to $3 billion of an increase compared to last year. Shares of JP Morgan are currently down about 6%. Citibank said similar things today, and their stock is also falling about 2.4% as well. As I clearly said in the last video, if you missed it, well, here you go. The bull thesis for 2024 has been ripped apart with inflation continuing to ramp up, with the Fed not looking like they're going to cut rates anytime soon. Add on the recent geopolitical tensions in the Middle East. There's not a strong bull thesis anymore like there was maybe heading into 2024. The only thing that really makes sense as a bull thesis right now is earnings are going to come in good. And the banks really started that off on a sour note. And that's likely another reason why the VIX is now up about 28.4% here on the day today, because nobody was really hedged for any kind of downside here, right? People were under the assumption that earnings from big banks were going to be just fine, peaches and roses, and that's not what happened today. I think when you mix all of these things together, not necessarily the greatest guidance from big banks, tensions in the Middle East, pretty negative comments from Fed officials like Goolsbee today, and that's where you get this sell-off. Because markets have been so strong, you really haven't priced in bad news, and now you're getting a little bit of bad news, and you see what's happening. I will point out, though, Tesla's stock is doing pretty well today, relatively. Okay, Tesla's stock is down about 2.2%. That's a different Tesla. Other days, if the NASDAQ was down almost 2%, Tesla would be down like 3, 4, 5+%. That's not happening right now. I do believe Tesla is likely going to be a little bit, I don't want to say more bullish because that don't sound right, but it's going to act a little stronger than what we've seen recently because you've already priced in so much bad news. And you can see that with Tesla stock being where it is, the worst performer in the S&P 500. I think you're going to need some bad news specifically for Tesla to cause a lot more downside from here, especially as we have Tesla earnings coming on April 23rd and we have the Robotaxi event on August 8th. There's plenty of positive catalysts on the near-term horizon. Now, Tesla's stock here on the day today over on StockTwits has sentiment which is bearish at 43. Yesterday, you were bullish at 62. Not a huge shocker considering Tesla is down about 2.25% currently. I would imagine sentiment's going to be a little bit more negative. Message volume today is at 48. Yesterday was at 53, so a little bit weaker. Again, I would expect that given Tesla's stock is down today. The participation ratio is at 54, so less accounts talking about Tesla as well, which is, again, common on days where Tesla stock is down. Global inventory numbers for the Tesla lineup do show a uptrend in inventories. It could just be production is starting to ramp, especially for the Model 3. You're recently seeing the Model X inventory numbers increasing quite a bit. And the Model Y, it's pretty clear there was a lot more production of the Model Y last quarter than deliveries or sales. So I'm expecting the Model Y inventories are going to stay high for probably an extended period of time. Full self-driving, Google Trends data is still sitting at about 100. And again, if you have not heard this or heard me say this before, I don't really care that it's at 100. That's great. Obviously, people just got a month free of FSD. There's going to be a lot more people searching about it, but I want to see, does it level out back in the, teens, low 20s, or does it stay in the 30s, 40s, 50s, 60s? Where does it stay? Depending on where it stays after the free trial, that could mean a higher adoption rate. And Tesla looks like they found their sweet spot with advertising currently and still running about 4,000 different ads with Google. On the charts, Tesla's stock found a little bit of resistance today at that 20-day moving average. Not a big shocker given what's going on in the markets. Again, I'm actually pretty impressed with the way that Tesla is trading today, only down 2%. That's a pretty good day considering all of the bad news we have. You have literally, knock on wood here, what could be a World War III like situation starting, and Tesla's only down 2%. I mean, that's kind of incredible. And now, no, I don't think World War III is starting. No, I don't think Iran or necessarily Israel wants to cause a huge war. But there's always that risk. And the markets, they kind of over exaggerate good news, bad news, everything until the news happens, until something happens. And then it's either like, oh, crap, it was worse than we thought. Or it's like, hey, it could have been worse. It wasn't that bad. That's probably the reaction that we're ultimately going to get. If something does happen over this weekend and it's not that bad, and it doesn't cause a larger conflict or another strike from Israel to Iran or something along those lines, the markets are probably going to soar on Monday, okay? As long as it's not too bad and the conflict isn't getting worse and the U.S. doesn't get involved. Now, if those things happen, then that's a bigger problem, and we'll discuss that over this weekend. But typically when it comes to war news or headlines, the markets react a little bit more fearful just before the event happens compared to afterwards. Afterwards, you tend to see a buy the news event. I don't know if that's going to happen this time. That's just what tends to happen over time. Now, Tesla, again, on the charts, I think there's a lot of support around 160. If you fall under 160 at this point, this trend line is going to put you in the neighborhood of about $156 per share. I think the markets would be really rough for Tesla to get down to, the high 150s, the mid 150s. I think that would be like the S&P and the NASDAQ down 4 to 5% lower from here. Is that possible? Of course. I do have a base case assumption of a 7 to 10% pullback in the S&P. You could say maybe a 9 to 15% pullback in the NASDAQ, just depending on earnings season. But I think, again, it's going to be on a stock by stock basis, and stocks that do well on earnings, that give good guidance, they're going to do well. Even if the markets sell off, I do think those kind of stocks will hold up better. And that's my assumption for Tesla. Tesla's going to focus more on profitability, and projected EPS estimates will need to go higher. So I'm actually pretty bullish on Tesla still, regardless of what's happening in the markets today, or really what could come in the markets. But am I bullish on the broader markets? Absolutely not. Tesla's priced as if it is essentially going out of business, okay, or its business is drastically hurt, and basically limping along, and we know that is not the case. And there's not a lot of good news, if any, that is actually priced into Tesla stock right now, whereas the markets, they're priced for perfection. And I think that's the biggest difference that you need to know. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.